major themes that we believe are impacting financial markets, and we're going to go through, our fund and the holdings and whatnot, and we are going to proceed with any questions and whatnot from there. Okay, sounds good. Let's continue on.
One second. Oh, okay, there it is.
All right. So specifically today, we'll focus on Intel and ARM technologies. We've seen that they've had resurgence in the market, at least from Intel's perspective. ARM is a relatively new player. Danielle's going to go through the details here. I'll focus more on the broader impact here, right? And with full disclosure, these are two stocks that the Theta Alpha Fund has a position in. And then we finally conclude with what we see that is interesting in the next few weeks. Okay, let's keep going. All right, Danielle, tell us about Intel and tell us why we have decided to include this in the portfolio, especially given that, for a number of years, this stock was kind of just sleepy.
Yeah.
But I'll turn the floor over to you.
Yes, so you're right that in the past few years, it used to be a sleepy stock. It wasn't like considered a bellwether in the stock market. But Intel Corporation were like got on my watch list in the start of 2026 basically. And I started following it because the US administration had interest in Intel Corporation. The reason for that interest was that basically the US wanted to be self-reliant as far as semiconductor manufacturing was concerned. So right now, the most of the manufacturing is done in Taiwan by TSMC, and I think like everyone is familiar with that name and that company. So most of the semiconductor manufacturing is done by TSM. The difference between semiconductor manufacturing and what the likes of NVIDIA and AMD do is that they design chips, but they hand over those designs to TSM to manufacture chips based on those designs. So everyone was basically reliant on TSM for manufacturing. Now the US administration obviously didn't want to like engage in that geopolitical scene. It wanted to be self-reliant. And ironically, at one point in time, like 40 years ago, 40 or 50 years ago, Intel used to be the biggest semiconductor manufacturer until it decided that it's not that beneficial and they should outsource. And then TSM came into being basically in the late 1980s. However, the basic reason for me following Intel was that it became a darling of the U.S. administration. The U.S. administration wanted to revive Intel. Okay, so that got me interested. And another thing that developed just like a month ago was that the CPU market got a boost because with the rise of agentic AI, there's this CPU renaissance. Because agentic AI not only gives you answers to your prompts, it basically tells you how to reach your end goal. And there's a difference there. It's a very nuanced difference, but there is a difference between both. So for agentic AI to function, there are CPUs that are needed alongside GPUs. It's not only going to be GPUs as what was happening with generative AI. Okay, so that's the other boost that Intel got. So I'll just like tell what Intel does first, and then I'll delve deeper into why we included Intel in the portfolio. So Intel the first is a strategic advantage to Intel is that it's an American semiconductor company. So that gives it a strategic advantage because if it does well in all of its segments, local procurement is beneficial to everyone as compared to like a supply chain that's very extensive. Okay, so Intel is an American semiconductor company that designs, develops, manufactures, and sells a wide range of computing and data center technologies. Now, its business is divided into four categories. One's client computing, and I'll simplify these things. These terms might be difficult to understand, but I'll simplify everything. Client computing is basically these PCs and laptops. So we see these PCs and laptops, even if we go to like places like Best Buy or any other place, we would see these Intel PCs and laptops. I used to have one before. Okay. The other segment is the most important segment is the data center and AI segment. Okay. This segment delivers high performance computing and AI solutions. Next is network and edge computing. So every AI company basically has this network and edge computing segment to it. So this segment provides networking, telecommunication, and edge networking technologies. And last is this foundry services. Foundry is basically chip manufacturing. Okay. So right now, Intel is undergoing a significant transformation focused on expanding its manufacturing capabilities, advanced semiconductor process technology, and strengthening its position in AI. Okay. So right now, there's a significant restructuring effort going on from the management, and also there's a transformation happening within Intel. Previously, Intel was only thought to be as a client computing company that used to develop laptops. It had used to have a foundry, but like that was 50 years ago. But like that foundry almost was thought to be extinct. So basically, it used to only deal in the client computing segment. But as with the rise of AI, Intel also started to make strides in this department. Um, this Intel Xeon processors, what they are, I'll get to it in the next slide. So in addition, Intel Foundry Services aims to establish the company as a leading contract chip manufacturer, providing advanced semiconductor manufacturing services to external customers. Okay, so they want to like develop first. They like basically are coming up with they basically are coming up with a solution to a problem. The problem right now is that TSM is the only semiconductor manufacturer, and it's capacity constrained. Like it can only develop so much, right? So that's the first issue. The second issue is there's this procurement concern and geopolitical concern as well. I really do believe that TSM, even now, at whatever price it's trading, it's about 400, but still it has that geopolitical discount attached to it. So if there was no geopolitical concern, the price would have been much higher. So this is the second concern that Intel would not have, because the majority of AI hyperscalers and everyone that's procuring AI is in the US. Okay, so there's a supply chain issue, but Intel tackles that issue pretty well because it's based in the US. Okay, as a result, Intel remains one of the world's largest semiconductor companies and a major force in global computing and semiconductor industry, competing with companies such as AMD, NVIDIA, TSM, and Qualcomm. So it competes with these companies, but in different ways. Intel operates a
So I
global.
think, I mean, to me, Danielle, let me ask you this. I think the main issue here is it's the buy American type of
Yeah,
environment we're in, number one.
yeah,
And number two, it serves to um, diversify away from any geopolitical risk between Taiwan and China.
yeah,
And I think there's a tremendous amount of value there on both of those points. I think, and like rightly you said, also on the technical step front, the production of the 2 nanometer chip is very important as well, right?
yeah. 2 nanometer.
Uh, and I would say that those are the three main things. And one, and I think the Buy American is going to be long standing as long as the current administration is there, at least for the next, I guess, 2.5 years or so. Whether you not like it or not, that is the reality. And you know what, even if a different regime comes in 2.5 years, I don't know if they'd be opposed to saying, no, no, we don't want to buy American. We don't want to diversify ourselves away from TSM. I don't know. I don't see that actually happening because I think it's generally a good idea. What do you think, Danielle?
Yeah, no one would see that happening. Like the tough part has been undertaken by this administration, and that was to get the ball rolling, like get the foundry
Yeah,
running. Okay, get the idea in motion. Okay, so
right.
now this idea is in motion. I think no one would oppose it because like once the hardest part even in life is to start something. Okay, so once it's started, and once it's got momentum, anyone like I think anyone would be stupid to like stop it after that, right? So why wouldn't like any country want to be self-reliant in an industry that's like the most demanded? I think after oil, semiconductors are the most demanded commodity. If I were to call it a commodity, are the most demanded commodity out there, right? So like if the ball's rolling and if the momentum is started, no one would stop it. So that's why I see very little headwinds to it. The only challenge right now is that Intel is coming up with its 14A technology chip. Okay, that's going to compete with TSM's 2 nanometer chip. Now, 2 nanometer is the latest semiconductor technology out there. The only issue that could arise with this is that is Intel's yield similar to TSM's yield at 2 nanometers or not? So if it's similar, then obviously if TSM is capacity constrained and buyers want more chips, they would come to Intel and like regardless, right? And it's just a matter of Intel getting some matters right, and then Intel's foundry, in my opinion, is good to go.
I would agree with that. I would absolutely agree with that.
Yeah. So
Yeah.
yeah. So
I think the
continuing.
broad, so like the technology of the chips, like, obviously it's there, right? And that's the nitty-gritty detail. But I think in broad strokes, you have to see like it's important to understand like at least the macroeconomic impacts of these things, right?
Yeah.
So yeah, I think it's super important that we understand that that there is a large wave of, political push to get this done.
Yeah, there's a big wave of political push to get it done. I think
Yeah,
like previous governments would have also thought about it, but they didn't have the, I would say the I wouldn't say the courage, but I would say the drive to like get the ball rolling, in my opinion. So you see in the past
right,
1 year, although like a lot of mishaps may also have happened as far as the US economy is concerned, in my opinion, but like there have been quite a number of initiatives. There have been initiatives related to nuclear power. There have been initiatives related to digital assets. And there have been
mhm,
initiatives related to like these foundries and America first, I would say. Like as if we were talking about another segment within AI, like memory chips, there have
yeah,
been a big push towards Micron and the US administration and the US government basically pushing other hyperscalers and everyone to buy from Micron as opposed to those South Korean companies like Samsung and SK Hynix, right? They also produce
right.
memory chips. So it's like America first. That's the policy that's being adopted, and a lot of initiatives are being taken now. So there's a drive behind these initiatives. Like previously, I think the previous administration may not have had this drive, but I don't think going forward. Anyone would oppose these things. Like if a country is being self-reliant in these technologies, it's like it's not like this is the like if I were to like give another example and compare it with something else like green, there was a green initiative like green technology or everything being green, right? Greenhouse, like reduce every greenhouse emission and make everything carbon free, right? So that
Right.
initiative may not have been that profitable, right? Every country has been trying. It's not profitable. It's like making the environment clean, right? But as like I think like everyone might not think um that uh cleaning the environment is like I know it's very sadistic, but like what I'm trying to say is like cleaning the environment might not be that appealing to everyone as compared to making money,
I
right?
don't think it's sadistic. I think this is the natural occurrence of things, and like we have to really separate. I mean, as investors and as traders, and generally, as if you're in business for yourself, you have to be able to separate the emotion from, and the feelings from the business decision itself. Like, obviously, do the right thing, work within your work within your ethical framework. That is obviously very, very important, right? But when sometimes things are out of your control, right?
Yeah.
And sometimes markets of like war affects markets, and war leads in terrible, terrible consequences. And the reality is, after a certain amount of chaos, the market simply doesn't care. You don't see like Danielle, how much influence you are a portfolio manager, you are a lead analyst on all these companies. Tell me something. How much do you impact? How much do you factor in the impact of changes uh, in the war between Russia and the Ukraine today?
Nah, I don't factor that
Zero.
at all. Yeah, zero.
Okay. When the war between Russia and the Ukraine first commenced.
Yeah.
You
Yeah.
probably had a little bit more flavor there, right?
Yeah.
It was a bigger factor to your price targets.
Yeah. It was a
And
concern.
unfortunately, are immune to that.
Yeah.
And this is no different.
Yeah, this is no different. And what I'm trying to say in other words is also like when this green initiative started, only one or two companies benefited from it, the likes of Tesla, because more EVs would be sold, and other small companies, right? But this is like a country being self-reliant on something that the whole world is gonna require, right? Semiconductors, basically. So no one is gonna oppose that, in my opinion. I don't think, and like it's not like a very niche market. It's like something that's required by every country. And if any country is becoming self-reliant and it has that technology to become self-reliant, then by all means, like no one's going to stop it. The only issue is like get the ball rolling. Who had that drive? I think this administration had that drive to like take initiatives on a lot of difficult subjects. It
Right.
has started that. So I think like it only boils down to, for me, and it's also mentioned in Intel's annual statements, that the thing is all comes down to how successful they are in their 14A chip yield versus TSM. Okay, if the yield is equivalent to or similar to TSM's yield at 2 nanometers, then like it's a matter of choice. Like who do you want to go to, like Intel or TSM? If you want to reduce your supply chain costs, then obviously you would go to Intel, because there's like it's a US based company, right? If you are more loyal to TSM, if you have relationship with TSMs for a long period of time, then you could go to TSM. But Intel also has that technology. Ultimately, there would be companies that would be coming down to Intel to buy their stuff.
Right.
It's just a matter of getting the yield right, like some nitty-gritties of the semiconductor manufacturing right. And then like I
Yeah.
think in my opinion, Intel's good to go. Okay. So as far as its production fabs are, where are they located? They are located in Oregon, Arizona, Ireland, Israel, supporting the ramp of Intel 18A. So 18A is equivalent to TSM's 3 nanometers. Okay. Now they're developing their 14A chip, which is equivalent to they have developed it. So it's equivalent to Intel's 2 nanometers. It's being tested, and they're going to come up with the yield numbers. And as soon as they come up with their yield numbers, like it's going to be a pretty big tell, in my opinion. Intel's computing business. So now we're like we're going back to their computing business, is centered on its x86 architecture. And the reason that I wanted to mention this x86 architecture is different from another architecture. That's the second company that we will be talking about. Okay, so the Intel's computing business, or CPUs, are based on x86 architecture, which is the oldest CPU technology out there. Like it's the when CPUs came first into existence, x86 architecture was the architecture that was used, and that's still being used. Okay, which powers a broad portfolio of processors and accelerators spanning personal computers, data centers, networking, edge computing, and AI applications. Okay, the client computing group, basically this x86 architecture, the products that it has are Intel Core and Core Ultra processors. Whereas its data center and AI segment has these Xeon server processors. So Intel's data center processors are called Xeon server processors, whereas its normal x86 based CPU processors are called Intel Core and Core Ultra processors. Okay. Now, going into the details about its foundry, we have already talked about it in length, so I'm not going to go over every point. What I'm trying to say is Intel is developing its 14A, which is expected to incorporate high NA EUV lithography, and is the first node designed specifically for external foundry customers. Okay, so any external foundry customers would be sold this node. Previously, whatever node they came up with, like the 3 nanometer node, they used to use it internally. Now it's going to be sold externally. And as I said before, it's going to come down to like what's the yield of this chip, 14A chip. And I mentioned it here in another point. The long-term success of Intel 14A and future leading edge technologies is increasingly dependent on securing significant external foundry customers to support the economics of next generation semiconductor manufacturing. What it means is it's a very arduous task, and it's also not a cheap task to build a new semiconductor chip, especially this advanced semiconductor chip. So in order to justify the economics of developing this chip, they would need a lot of customers in order to justify the economics and keep going on and keep building more and more. Okay, so as I've said before, I don't have doubts, but it still is a point in contention that that the success of their foundry hinges on the success of this 14A technology. Okay. Now, one other important point is advanced packaging is another thing. So advanced packaging is basically packaging of these transistors into chip form. Okay. So that's called advanced packaging. And very few companies do this. Okay. So Intel also does advanced packaging, and advanced packaging is becoming a key process within the semiconductor manufacturing. Okay. So advanced packaging is also a key component of Intel's technology strategy, enabling the integration of multiple chiplets into a single high performance system. Okay. So Intel also undertakes this process, and this process is becoming very important. So what I mean to say as far as advanced technology is concerned, that if it becomes more and more important, it's going to be a very important revenue driver for the company. Okay. So Intel believes it's the only three companies alongside TSM and Samsung actively investing in 2 nanometer class process technologies and future transistor architectures. Okay, so as we have said before, Intel alongside TSM is the only big supplier. Samsung does it to some extent, but it's a very little extent, because Samsung is also engaged in a lot of other processes. That includes memory chip, that includes Samsung phones and other stuff. It's also involved in hardware. So Samsung's foundry is small as compared to what Intel could do or what TSM can do. Okay. Year to date, Intel's performance, stock market performance is 210. It's gone up by more than 200% year to date. The stock has gained. Okay. And it's one of the highest among the semiconductor sector. Intel is the only US company combining leading edge design and manufacturing. So this is a very important point. So leading edge design, there are other companies that do design. Okay, that includes AMD, NVIDIA. There are other hyperscalers that design their own chips, Amazon, Alphabet, but they don't manufacture those chips. Okay, Intel also designs its own chips. Okay, but it also manufactures these chips. Now, Intel is the only company. Okay, TSM manufactures chips, but it doesn't design those chips. So I think, as far as I know, compute chips, Intel is the only company that does both of these. There are other companies like Micron that designs and develops manufactures its own chips, but it's a memory chip. Okay, it's not a computing chip. Okay, so as far as compute chips are concerned, Intel is the only designer and manufacturer in the whole world. Okay, in our opinion, this makes it a strategic asset to the US, as we have mentioned before, supporting domestic semiconductor manufacturing, supply chain security, national defense, and CHIPS Act objectives. So national defense is very important. Because and Matthew, you can talk about it in more detail. Like if you source technology from Taiwan, okay, right now the issue with Taiwan is China believes that Taiwan is a part of China. Okay, so in the future, if the US keeps sourcing these chips from Taiwan, there could be a concern that those chips might have some spyware, and that could literally take down or get information of whatever is happening in the US, right? So there's that concern. There's that defense
Yeah.
concern, right? So if you're like if you have developed your own chips, like in your own country, then that concern is taken care of, right? So that's why it's becoming a very I would say it's becoming a strategic asset to the US government, this company. Um,
I would agree with that. I mean, the Chinese is obviously a great trading uh, ally with the United States. Um, but there is obviously some sensitivities there in terms of surveillance,
yeah,
national security, and these are risks, and these are risks that we're not going to be political here, but these are risks that can very well adversely influence financial markets in North America, right?
yeah,
If there are breaches, if there is some kind of material news coming to the media, to the headlines, say such and such was done. And we have examples like look at Huawei, right?
yeah,
In the past, look at the reason why BYD isn't prevalent in the United States,
yeah,
right? It's because of national security concerns, right?
yes,
Now, I think it's because in the case of BYD, and we've discussed this before, I also think it's also because of protecting American interests in the automotive sector.
yeah,
BYD does make a fairly advanced car, which will likely rival many of the North American brands, especially Tesla in the electric vehicle arena, right?
yeah,
Um, but this is a concern, and this is one of these. It's very hard to hedge geopolitical risk. Very, very hard because you simply have to say, well, I'm not going to be in a certain economy. The challenge there is the world is becoming a smaller and smaller place, and data is being transmitted, across countries when you don't even know it. Um, Business is being done across borders when frequently, if like it's commonplace now. It's very hard to hide, right? When these things happen, it's very hard to hide, and that's why you see when in the past. I mean, Danielle, you passed your CFA bit quite recently. I'm not too sure if they still have it there, but you want to diversify away from industry. So when the stock market goes down, the bond market goes up, and vice versa. And that's like
yeah,
the classical thing. Um, but I think with more kind of global transactions, you see, hey, listen, like when one market goes down, they all go down. It's
yeah.
becoming more and more correlated. And even in the past, when one market went down, they all went down, but only in times of really severe economic downturn. Now we're seeing that change a little bit, at least anecdotally, right? Um,
Yeah, I think you're right. And what you mean to say is the world is becoming a global marketplace, basically.
and it's just becoming even more so, even more
Yeah.
entwined.
Yeah, but one concern that remains is the US right now, why would it bother meddling into Taiwan and China? The concern is if China takes over Taiwan and it puts an embargo on any chip sales to the US, then the US is
Mm.
starved of chips, right? So the US doesn't want it. Like it's in US's best interest to get this company running and have its foundry service doing well so that it's not reliant on TSM that much. The CHIPS Act, I think, in my opinion, was basically to give more incentive to TSM to like build factories or fabs in the US so that that concern is hedged to some degree. But if China takes over Taiwan, then even if some of the fabs of TSM are here, we don't know what's going to happen. The US, I think, how this administration is going about doing things, it wants to become self-reliant in everything. So that's why I think Intel is becoming a very key strategic asset to the US administration.
Absolutely. I think this is all the right things that are being done here, right? Especially from an investment perspective. I mean, as we said before, it was very, very sleepy company before. And I'll be honest with you, about a year and a half ago, I thought this is down and out,
Yeah,
right?
me
Like,
too.
why invest in Intel when you can invest in NVIDIA,
Yeah,
right? And now it's made a resurgence, right? So, I'm quite pleased to see this. It also increases the AI stack that uh people are talking about so much in the news these days, right? And maybe, and I think in that AI stack, guys, and Daniel, you can attest to this. They are not all created equal, right? You see,
They're not.
even if you take one metric in terms of fundamental data, and that metric being like a PE ratio, they're not all created equal. Some of them are trading at exceptionally low PEs that you would not expect, and some of them are trading at, like, not, I would say outrageous, but certainly
Higher.
higher
They're
PEs,
relatively higher P's. Yeah.
relatively higher. And
Yeah.
and Danielle, like, in the tech sector, usually it is characteristic to have higher PE ratios in the
Yeah.
tech sector. It's not
Yeah.
unusual. Like, what would be unusual is if you had a TD bank, or like a bank trading at a very, very high multiple akin to something in the technology sector. But you don't have that. Here you have, it goes part and parcel with the industry,
Yeah.
and you have opportunities. I think across, if we're just only looking at P ratios, one fundamental factor, you have options. You have a certain amount of choices there that you can make in terms of where you want to put your money. Of course, I would never only look at one factor, but it is widening the scope of choice the investor has to position their money.
Yeah. And to sum everything up, as far as Intel is concerned, like why we included Intel in the portfolio. First, it's a key strategic asset. It's becoming a key strategic asset to the US. Second, there's this CPU resurgence because of agentic AI. So Intel is the big holds the highest highest percentage of market share in the CPU space. So it's bound to do well there. It also deals in the advanced packaging category. So advanced packaging is becoming an important process in AI. So it has revenue there. So foundry business, if it takes off, there's unlimited. I wouldn't like. It's a big stretch calling something unlimited demand, but right now this is what it is. TSM's capacity is what's the okay? So TSM's capacity is constrained. It has no more capacity. Like it has orders filled through 2027 and 2028. So it can't fulfill all the orders. There are more orders coming in, and TSM wouldn't. It's the only manufacturer of chips out there. Okay, so there's no other company apart from TSM at a mass scale who could manufacture these chips. Samsung does it, but to a very limited scale. The only other option is Intel, and Intel is working, or it's almost like that process is done. Like it's gonna come up with its 14A chip that's equivalent to TSM's 2 nanometer chip. And once it's sold to external customers, obviously there's going to be a line or a number of customers that are going to buy these chips from Intel because they want to get a hold of these technologically advanced chips. And if they buy these chips from Intel, obviously that's going to bode very well for the company in terms of its profitability. So these are the reasons that we included Intel in the portfolio. And these are very strong reasons. Like a lot of things would have to go wrong in order for Intel to like literally mess this up, in my opinion. What do you think, Matt?
Yeah, I mean, listen, like, I think the main risk here is that there's some kind of sector or macro factor that affects the entire industry. Maybe not Intel specific, right? Because these companies, they seem to have demand for their products. They seem to know what they're doing in terms of managing costs. They're headed pretty well. Generally speaking, their C-suite is exceptional. Um, when a macro adverse effect happens, that will push everything down, right?
Yeah.
So yeah, that's the biggest risk. And I think Danielle and I spend an awful lot of time, like literally on a daily basis, thinking, okay, well, what could go wrong here, right? And
Yeah.
effectively, portfolio management is a risk management exercise, right? You are measuring how much risk you want to take for any given unit of return, right?
Yeah.
And yeah, we're smack dab in the middle of this. All right, Danielle, let's continue on.
Okay, so this is like I'll just go over it quickly. Intel's last earnings or revenue. So revenue has done beaten estimates, and you could see like how by how much earnings have beaten estimates. This is the latest prediction. Intel is predicted to do zero point 0.2 per share for its earnings. Let's see how it turns out in the next earnings season. But like we obviously think like Intel's gonna do well. Now, the next company that we wanted to focus on was ARM Holdings. I go over a little really quickly. So this is a UK based company, okay, and became publicly traded on the Nasdaq in September of 2023. The difference between ARM and Intel is that ARM manufactures CPU architectures, but based on ARM architecture. It's not x86 architecture, it's a different architecture, but they also manufacture CPUs, but it's based on ARM architecture. It's different from Intel's x86 architecture. The reason for including ARM was after Intel's earnings came out last time, Intel said that there's a CPU renaissance happening, and that's because of agentic AI. Um, Intel is not going to be the only CPU supplier because there's going to be a huge demand for agentic AI to work, right? It's going to be equivalent to generative AI. So the ratio between CPUs to GPUs in agentic AI is 1 to 1. Previously, it used to be 1 to 8 when generative AI was out there because generative AI basically was training itself on these language models, and it used to come up with answers. There was no orchestration of tasks, and there was no like going to an end goal or coming to an end goal or providing an end goal kind of thing. With agentic AI, that's what AI would do. So it needs one CPU for per one GPU in order to orchestrate whatever it has thought of. Okay, so previously the other reason for including ARM Holdings was that ARM previously used to license work on a licensed business model. So what that means is like ARM used to build its architecture and get royalties based on its architecture. So different company like Apple, Nvidia, Qualcomm, Amazon, AMD used to come up and used to ask ARM for their CPUs, and they used to like provide their designs, CPU architecture, and they used to earn royalties based on that. But now like everything changed after Intel's earnings came out. ARM Holdings announced that they're going to come up with their own CPU line. So when they're going to come up with their own CPU line, that basically means that they are going to compete directly with Intel and AMD in the CPU space. And you're going to see ARM CPUs. That's a more direct model as compared to like just earning royalties. Okay. It's basically if you're earning royalties, that's like earning 20 cents on the dollar. But if you're like selling the same product out in the market, that's like getting $1 on $1. So that's the difference between like two things. ARM's architecture is more power efficient, consumes lower energy per compute task, is high performant, is more high performing in accelerated AI basically. Okay, so ARM's architecture, and this is a known fact, that ARM's architecture is better suited to um, AI CPUs. Okay, if you want to do anything with AI, ARM CPU architecture is better suited to this technology. So every time data is processed on a smartphone, inferred through an AI model, handled in cloud infrastructure, run on edge devices, it increasingly relies on ARM-based architectures to improve efficiency and reduce power consumption. Okay, so power is another important thing it's an important consideration. So power right now, power is enough, but in future, this rate at which AI is growing, power is going to become a concern. Okay, so more and more companies are going to require chips that do better computing tasks but require lesser power. Okay, so ARM's architecture is better suited to it. We actually wanted to like get onto this I would say, get onto this momentum trade of CPU, and we didn't want to miss out on anything. So we had one company in the two companies, I would say, in the form of Intel and AMD in the CPU space, but those companies were based on x86 architecture. But we also thought that what if companies go for ARM-based architecture? Okay, so what would we do then? So we didn't want to like leave anything on the table. We wanted to hedge against that sort of I would say risk, or that sort of opportunity. So we wanted to get on board with that opportunity. So that's why we also included ARM. ARM is a pretty solid company in terms of its financials, and I'll just show its financials. But just concluding this slide, this is a huge departure because ARM is now designing full CPUs itself, selling silicon solutions. So it's going to compete more directly with Intel's Xeon, AMD's EPYC, and NVIDIA's Grace CPUs. Okay. So ARM year to date has done 223%. So it's gone up by 223%. Now, one of the most important questions that I've been asked about is like, are we getting late? Did we like choose, did we include these stocks after the run is over? That's not the case. Because like we just heard that there's this, or just we just got this information that this CPU renaissance has started. It's gonna translate into actual earnings in the next few quarters, and this price momentum is gonna keep going on. So when actual earnings are realized, and when you see in the news that more and more deals are being signed with different hyperscalers and other customers, that's when the stock takes off, and there are analyst revisions as well. So that's like what's gonna drive the stock price even higher, in my opinion. Okay. So traditional x86 systems face challenges with higher energy usage. ARMs are more power efficient. The traditional x86 systems are like they require more power. So performance per watt optimization is better with ARM, and it is better to deploy ARM-based architecture on a mass scale as compared to x86. Okay. So ARM's financials have been, like you see, financials have been growing year over year. So revenue and all these numbers, EBIT and net income has been doing well. So net income have been doing well. So all good on the financial front as well. Now, we're like, I'll leave it to Matthew to like explain what's going on as far as S&P and Nasdaq is concerned.
Sure. So, I mean, there's a saying in the stock market that, the stock market climbs the wall of worry, right?
Yeah.
And, you can see here from about April up until like literally today, the stock market is climbing that wall of worry. And this wall of worry this time seems to be the Iran war, the related impact to inflation and oil prices, right? Which are all very, very closely related, right? So, um, so yeah, I think it's very. This is exactly what's been done. In fact, I cannot think of a single bull run where people thought, yeah, 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 everything is fine. This is exactly where we should be. This is exactly where I thought things would be. It's always with a bull run always has a certain amount of caution built into it, right? Just like, as human beings, when the market goes down, there's always a certain amount of angst, say, oh my goodness, like, the end days are near, and neither, rationally speaking, uh is actually accurate, right? But this time what has happened is, we saw an end to, kind of, not an end, but we saw some kind of glimmer of hope with the Iran US war subsiding a little bit, and them entering into more and more talks. And accompanied with that, we saw a very strong earnings season, right? Um, and combined, that combination, more pleasant negotiations between Iran and the United States, combined with a supportive earnings season, a positive earnings season, we saw this great big run up,
Yeah.
right? And I don't know if we're in the middle of this now or the end of this now, no idea, right? We also saw Um, and the Nasdaq is going to look a heck of a lot similar to this chart as well in the next page. But we also saw that uh, the initial hyperscaler stack that we saw before, they have done reasonably well, but certainly not as well as kind of the, quote unquote, uh, second
Semiconductor.
derivative AI players, right? And, that's where the companies like ARM comes in, the companies like KLA come in, the companies like uh, Marvell or Vertiv, et cetera, come in, right? They have, those stocks have really, really run up, multiple times more than the stalwart kind of Magnificent Seven, right? And this is the result we have. Uh, we have just passed May, and the old adage of sell in May and go away seems to be exactly that. That it seems to be simply an old adage of sell in May and go away. Now, is that going to be the case for June? No one has a crystal ball, but I do believe that, eventually, fundamentals do permeate through the market, at least in the mid to long term. Perhaps more importantly, short-term technicals and emotions drive the short-term market. But that this is what we're seeing here now on a technical level. We do see this market inching up ever so close to, one could say that, hey, is this rally getting more and more tired? Maybe it is. Maybe it is. Um, because it certainly had one heck of a run up since April, right? April to June, all of April, all of May, a little bit of June, one heck of a run up. I think what, Danielle, the markets are up about 8% for the month of May. Um,
The Nasdaq in Canadian? Yeah, around
but
that.
whichever, this is like
Yeah,
broad indexes.
yeah,
Don't but
yeah, around this.
basically they're up in 1 month, the amount that they sometimes are up in a year, right? So,
Yeah.
put that in perspective, right? So is that type of performance really repeatable and reasonable month over month? Like probably not, right? Um, but that being said, this is what we've seen over the last little while. So is there some technical fatigue at the top of the market here? I wouldn't be surprised. Is a bit of a pullback in 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 stock prices warranted? Maybe, maybe. And is it healthy? Yeah, it is healthy. Like a little bit of a correction now and again is healthy. But uh, but like certainly not like a 10% correction. But yeah, absolutely. A little bit of correction is healthy. People can take their breath, reassess, reallocate their funds, and continue on with the bull run. Um, yeah. Anything else you want to mention on these charts, Danielle?
Now, one other thing is like as far as these indicators are concerned, technical indicators, I'm saying, not fundamentals, but technical indicators show that this bull run might continue. I'm just talking about indicators technically. These indicators
Right.
technically show this MACD show this is like cutting the slow moving average from below. So like these technical indicators show that this run might go on as far as
Right.
technical indicators are concerned. Okay. So I'll just move on to the next slide. These are our holdings.
Yeah.
Right now we have these many holdings, like 18. The one of the reasons is like as Matthew said earlier, hyperscalers have performed reasonably well, but these stocks, these second order derivatives, and some of the semiconductors are the main stocks that are driving the stock market. And obviously, they have solid fundamentals behind them. And if we see something as benefit, as if we see a stock that's going to benefit the fund, obviously we're going to have, and we see like that's a valuable proposition, the likes of Micron and stuff, we're going to include that in a portfolio because we are like working in the best interests of the investors. So yeah, so we included these stocks in order to make the most for the investors.
Yeah. So I mean, from this perspective, like we're comfortable with our current exposure. This is monitored on a daily basis. We're comfortable with our holdings. We're still well within a range to be able to monitor each of these securities very well. Um, we're not a fan of having a 50 stock portfolio. Like it's just not feasible. There's Danielle and myself. Danielle is the main analyst uh, in terms of covering the companies. absolutely. And there is a bandwidth, right? We have to have a very deep knowledge of what these companies do, right? And that only happens if there's a handful of companies, and we're very comfortable with that in this portfolio. Now, this portfolio, don't get me wrong, this is an innovation-led portfolio. Right now, the innovation is AI. Okay, so you want to call it an AI play? Yeah, you can call it an AI play. Now, there may come a time when innovation is not with AI.
Yeah.
Okay, cool. That's what this portfolio will adapt to as well, right?
Yeah.
Now, innate within that description is this is a higher risk portfolio. Absolutely, right? We're going to have a greater sense of variability in our NAVs, and that's par for the course. And I think uh, this is meant for an investment that is over the course of years, not months. I don't think anyone that's typically quote unquote investing in any of these companies are going to say, "Well, I only want to have my money in for 1 month." That's just simply not reasonable. But this is what this portfolio was built for. It was built for that alpha type of performance. And whether these investment themes play out over 1 month, 1 quarter, 1 year, 5 years, that remains to be seen. But we do believe that they will play out, given what we are seeing on the macro level and at the company specific level. Okay, let's continue on. So here we have, we are trailing the Nasdaq a little bit, and I'll tell you why we're trailing the Nasdaq. So first of all, if I told anyone anywhere, hey, we're doing 11% 5 months in, it's probably a great return, right? Um, Now the reason being is that a lot of our assets in the first few months of the year were in Magnificent Seven stocks, which have performed pretty well, almost 11%, right? However, there are stocks on the Nasdaq that have gone up literally this year like 300%,
Yeah.
right? And we have to make sure that those stocks get included in our portfolio, but included in our portfolio at the right time. Meaning, after we have internally vetted them and deemed them appropriate for inclusion. Just because something goes up by 30% in any 1 month doesn't mean it's automatically included in our portfolio. It has to be vetted because there's a lot of stocks that could go up 30% in 1 month. It
Yeah,
doesn't
we
mean that.
don't go ever after every shining object because
No.
if it goes up, it could fall down, and we are more concerned about investors' money, like if they don't lose money. So like that's a very important consideration. So everything has to be vetted.
Yeah, absolutely. So, when we observe a rally in a certain stock, we are going to act on it. We'll act on it fairly nimbly. But that being said, we need to make sure it fits the criteria of this fund and our own internal fundamental and technical criteria. Otherwise, it will not get in, and that takes time, right? That simply takes time. But we believe we're quite well positioned here. We are generally gaining. I think we gained this month on the index and
Yeah, we
and
gained last month. We are closing gap, and I think if I were to give an estimate by September, this gap will be much closer because we have the right holdings now. It's a matter of preserving everyone's money and also getting the theme right. As Matthew said earlier, it's we are an innovative, growth-oriented fund, so we'll tilt to wherever growth lies. Right now, it's in AI. So yeah, we recognize that and we are on board with it. And that's how we
correct.
go. Like wherever growth would lie, we would tilt toward that because we want to make the most I'm not I can't like promise this, but like we want to make the most amount of money for all the investors in the right way. Like
In the
not
right
not
way.
not and not lose it basically. Like obviously. So the most important metric is Sharpe ratio. It's not here, but like Sharpe ratio is basically the return that you earn per unit of risk that you undertake. Okay. So the Sharpe ratio, I've not calculated that for the Nasdaq and for our fund, but the Sharpe ratio would be roughly equal or maybe better. And what that means is basically the return that we are deriving is higher as compared to the risk that we are taking. Okay, so the downside is also lower as compared to the Nasdaq. So that should also be considered because the stocks that are going up in the Nasdaq right now are like mid cap stocks, that could easily fall. I could give an example of Oracle last year. Oracle went up by 30% in a day or two, but then it fell, and it fell by the same amount. So we don't want anything like that.
Absolutely. All right, let's continue on, Danielle. So yeah, so guys, if you are interested in this fund, it's you can we can take registered funds, TFSA, RSP, RIF, et cetera, et cetera. This is again, as I said, a long-term portfolio investment horizon with a higher level of risk. And yeah, if it's for accredited investors, portfolio managers, SMA accounts. Um, and yeah, if you have any questions, let's move on to the next page here.
Okay, so this
What to
slide
look
is
out
a,
for?
yeah, what to look out for. This slide is a bit like I would say unreadable, but I just wanted to mention one important point before you go on, like about seasonality. The point was that if you see this June, we're in June, right? So if you see this June column, you see in the past 13 years, I would say 13 or 12 years, there have been more greens as opposed to reds. And normally June is thought to be not a strong month for the stock market. But in the past, seasonally, in the past few years, June has been very profitable for the stock market. So that analogy of that, like not analogy, but that saying of sell in May and go away, I don't think it's holding very it's not holding up, I would say.
It's not holding up these days. And like if we look here, like look at last year, for example, you know, uh positive
4.96.
month in Jan, positive month for both 25 and 26, negative in Feb, both for 25, 26, negative in March. Now we started a heck of a run up in April. We haven't updated this for May, but it's also going to be a pretty big run up. Now, is June going to be the same? Well, I mean, if you look for the last few years, there's a high likelihood, if this is what your indicators are looking like, there's a high likelihood that June could be positive. But that's simply based on what has happened in the past, not the current macroeconomic situation or specific fundamentals, just simply what has happened in the past.
Yeah, there have been summer rallies in the past 1 or 2 years, as far as I remember. So we cannot rule that out.
Yeah. Okay,
Okay.
let's continue on. So this paints a slightly different picture. Like, we looked at like maybe like the last 10 years or so of data in the previous slide. This is the last 20.
Hmm.
And yeah, in the last 20, it has been a bit of a weaker month, right? But nonetheless, even over the past 20, Danielle, it's basically been flat and it's gained
Yeah, basically
63% of
been
the time.
flat. Yeah,
So it's
0.6.
not always bad at all. In fact,
Yeah,
it is
yeah.
most of the time positive.
Yeah.
So we have to
So
kind
like
of,
because I'm sorry to interject, but like
no,
because
no, go
last
ahead.
20 years also take into account this 2008 and 2007, those years when there was a big financial meltdown. So like the return was like negative 8.6. So that skews the average down, right? That brings the average down and everything. But like even after that data, June has been a flat month. But in the past 13 years, that's why I showed the previous slide. In the past 13 years, like there have been more positives than negatives.
Yeah. Okay. Let's continue on. So, guys, if you have any questions, contact myself. I'm a portfolio manager of the fund. Danielle is also portfolio manager with me. David is portfolio manager, all with Quarter on Capital, which is the investment fund manager for the product. But yeah, if you have any questions about the Data Alpha Fund, feel free to reach out to any one of us. You want to go to the next slide, please, Danielle? And we have to keep the disclaimer on for a little while. Please become familiar with it. And yeah, if you have any questions, guys, you please let us know. Thank you for all your support. And we look forward to speaking to you next month.
Yeah.
Thanks, guys.
Thank you, everyone.